JJ the CPA here. Hope you're doing well. So with the employee retention tax credit, one thing I want to make sure you're really aware of is while it's great to get the credit, you should get it, especially if you qualify, but it does have a tax effect. And many that maybe are helping you get the credit are not telling you this. They should be aware of it if they're such an expert in this area. But what the IRS tells us, and it's an IRS notice 2021-49, and if you look at page 24, the IRS tells us in no uncertain terms, here's how the tax effect works. First, it is a reduction of your deduction. What that means is if you have $100,000 in wages, and let's say that you got a $26,000 tax credit, right, with multiple add up of your employees and the tax credit. So you have $100,000 deduction. Well, you have to reduce that deduction by $26,000, which means that you would only be allowed a deduction of $74,000. Now, hang on. When do you have to make that adjustment? Now, again, go to IRS Notice 21-49. Go to page 24. It tells you under no certain terms, the year in which you make that adjustment is the year in which the wages were deducted to arrive at the tax credit. So let's just be clear, put it in layman's terms. Somebody right now files and they go do a 941X. So whether that's here at the end of 2022, or it might be into 2023, maybe you're listening to this in 2024. But if you're getting the credit and you're filing a 941X and you're going back and you're claiming a credit for 2020, the IRS expects you to go back and amend your income tax return for 2020, reduce down that deduction, and then pay any taxes that are due to the fact that you had a reduction in your deductions. If you're filing a 941X for 2021, well, then you have to amend the return. Right now, you're probably thinking, oh, that doesn't even sound right. It doesn't sound fair. And you probably are right in the sense that you file for the employee retention tax credit and you may not get it for 3, 6, 9 months. And you now have an expectation by the IRS to go back and amend a tax return and then pay them the tax on the credit that you have not actually received. It is a pickle. But what I'm telling you is right there, IRS Notice 21-49, you don't got to be a tax pro to read it or understand it. It tells you right there, you got to go back and amend it. So what you want to be is aware of this information. You need to be working in conjunction with your tax professional. You shouldn't be doing anything related to the employee retention tax credit without your tax pro being right there with you. So at the end of the day, yes, the employee retention tax credit is phenomenal. It's wonderful benefit for those that qualify for it. It's there to benefit and in essence reward the employers that through the pandemic of either governmental shutdown, partial or full, or due to the gross receipts being down, that they still paid out wages and then getting a credit related to that. So if you qualify, then you should get the credit, but you've got to be aware there's an income tax adjustment. So even if you decide you're not going to follow the law and you're not going to amend your return, at least you're now aware that you will have to reduce down your deductions by the amount of your credit, and you will owe some tax on that. So do the math. Look at what's your credit minus what you're going to owe in tax on that credit, minus what you're paying somebody to help you with, and how much is left over. And I say that to say this. Don't overpay for someone to help you because it's really not that hard. It is simple. You either qualify or you don't. Were you under governmental order? No, then you're not going to qualify unless your gross receipts are down. Just because your business is affected doesn't mean you qualify, period. They didn't change any laws. You're being lied to. I hate to say it. You're dealing with people that don't know what they're talking about. So in the body of this video, I'm also going to give you a link to some other videos where I talk about the myths that are being spread, and I back it up with what the IRS is saying by giving you links to all of these things. So I'm not just telling you, I'm just telling you what the IRS is saying, and I'm actually giving you the links to go and read it and verify it for yourself. All right, hey, thanks for tuning in. I'd love it if you'd subscribe, and then don't you ever forget, you've never met a CPA quite like me. Have a great one.